going on, Sofi investors? Welcome back to the channel. What a turbulent pre-market we've seen, and what a very strong recovery we've seen. I guess it's the lucky hat and tie. Who knows? We'll just chalk it up to that. But we have some data to go over here in this video. We do have a potential very good catalyst or a very bad catalyst that I want to also talk about, as well as what is the market expecting as far as the Fed is concerned, and much more. So stay tuned, hit the like button for me, subscribe to the channel, and make sure to comment down below. So let's get into this information. Sofi was up 5.19% today, up 0.10% in after hours. So a very strong day. We've seen that initial gap down across the broad markets because Russia invaded on Ukraine, or invaded into Ukraine, I should say. Sofi hit a low of $8.45 per share, and it pretty much opened under $9 per share, and then immediately gapped back up to about that almost $10 range, sold off, and then continued to slowly climb throughout the rest of the day. So if anybody was able to take advantage of these really low prices, congratulations. But we are in for a lot more volatility. We are going to see a big move tomorrow, in my personal opinion, to the upside or to the downside. I think to the upside. And why is that? Well, simply put, when you see big fear catalysts, specifically war that does not involve the United States directly, you tend to see a big sell-off heading into that event, or possibly on the day of that event, but shortly after the markets tend to actually rally. Think about World War II. We averaged between those years, between 1939 to 1945, we averaged about 7% per year in the markets, and every single conflict we have had since then, you actually see peak fear before that conflict, and then you do tend to see a rally after that conflict. Now, I do want to let you guys in on this information though. Russia has basically said that they would be open to negotiating a surrender between obviously them and Ukraine if Ukraine agrees to demilitarize their country. And what that means is they essentially would not have a military. It does not look like that is going to happen. Ukraine is forcing anybody ages 18 through 60 to stay and fight, obviously if you are a male. So things have changed around a lot, and it does not look like Ukraine is backing down. They're actually making some progress, and they have retaken an airport. If you guys take a look at this, just 1 second, there's that announcement that all men have to stay between ages 18 and 60. It's getting crazy. They gave out 10,000 automatic rifles so far. It really, makes you think you are very fortunate to not be in that kind of situation. Here's this. Head of the Russian tactical unit that surrendered to Ukraine with his men said, "We didn't want to kill anyone." And that is that guy right there. And they completely killed like half the unit, and the rest did surrender. As well as this, Ukrainian troops in full control of the Hostomel airport, not sure if I'm saying that correctly. Russian airborne forces eliminated. So it's good to see this. I'm definitely rooting for the underdog here. It's kind of like, in high school, if there's a big kid picking on a tiny kid, you get no props for that, and that's not cool. So it's good to see that they are actually fighting back, but it's very unfortunate. I wish it did not have to happen that way. But as far as the markets are, hate to say it, loving the fact that the big fear is out of the way. If Ukraine does surrender, I would expect to see a 2 to 3% positive day for the markets. I don't think that is going to happen. And if the war continues and Russia goes all the way to the border with Ukraine, you are going to see a lot of talks about potentially Russia starting a world war if they even miscalculate and fire a missile into Poland or something along those lines. Just being so close to the border, you're definitely going to see some of those fears spark back up, and you probably would see a sell-off again in the marketplace. Either way, it is going to be very volatile, and Russia knows that directly. Their stock market was down 33.28%, the largest single day decline in their history. Russia is certainly paying a high price for that, with now 80% of their total assets sanctioned. kind of crazy when you look at it like that. So their accounts totally frozen. Not good, and that people are not going to like that. Russia's basically telling them, hey, we knew that was going to happen, and that's the price we have to pay. So pretty interesting right there. We'll see what happens with all of that. The reason I talk about it is because it directly affects your investments. Like you've seen today, you can get wild swings in the market due to that. As far as SoFi specific data, we are looking at short interest of about 20.23%. Current shares that are sold short of about 125 million. Cost to borrow max of 4.32%, and the utilization is at 100%. Days to cover at 2.84. We all know this is not a short squeeze trade. You're not bagging on a short squeeze happening, but if one does happen, I don't think anybody's going to sit there and argue with that. And before we get too carried away with the technical analysis here, I do want to go over some of the other data that did come out today. So we got the jobless claims totaled 232,000, slightly less than expected, so that was very good. Q4 GDP revised up to 7%, also very good. Continuing jobless claims hit their lowest level in nearly 52 years. That is wild. And we had our largest year of GDP growth since 1984. So we were also coming off of a lot of, good news, good data that came out at 8:30 a.m. So that looking fantastic. Can't argue with that, and that is part and part why we actually did start to recover here. Now, I do want to switch back, take a look at the option flow sentiment. We're only getting 41% positive order value, so it looks like hedge funds are being a little bit on the restrained side as far as buying more options today. Does kind of suggest to me the rally's not as strong as we would think, but SoFi has also fallen so much, and we have seen such a strong positive order flow every single day that it's kind of neutraling that out in my own personal head. Yesterday, 88% positive order value, and over the last week, 68% positive order value. So overall, looking very good. Now, this is also very, very important. 89% of market participants are expecting a 0.25% rate hike. Only 10% of investors are expecting a 0.5% rate hike. So if we start to see, for whatever reason, this start to switch and more people start to expect a 0.5% rate hike by this March 16th meeting, you're going to see the market selling off because of that. There is a direct correlation between this data right here and what happens to the markets. The more people price in that 0.25%, the more bullish the markets get, and vice versa for the 0.5% rate hike. So also definitely on the bullish side compared to what we have seen just about 2 weeks ago. More than 50% of market participants were expecting that 0.5% rate hike. So all is good there. SoFi actually moving up a little bit more here in after hours. But if we pull up the daily candlestick chart, we are above $10 per share. That is that key support level, and I really don't expect to go under that in a substantial way, unless this whole, Russia-Ukraine situation does develop more, there's growth fears or something else happens. At this point, you're going to have to see a major escalation. You're going to have to see more tensions of possibly the U.S. getting involved, or like I said, growth concerns, or the Fed coming out and being super hawkish, something to push us under $10. But it looks like a very solid level right now, and we should continue to, trend to the upside, since we are really at this bare bones bottom of the barrel price right now. And SoFi going up a little bit more in after hours as well right now, up 1.16%. The 20-day simple moving average and the Bollinger Bands is sitting at $11.85 per share, a long running resistance level. If we can break out above that, that should also be a very bullish thing. And on top of that, the 50-day moving average is at $13.30 per share, and then that key level is $14 per share, and we're about $4 away from that. So I think it's too early to talk about that, but we do have earnings coming on March 1st, and it looks like Square earnings are very, very bullish. Look at that, 23% rally here in after hours. Wow, that is incredible, and that should carry over into, I would imagine, PayPal and SoFi as well, and that's probably why you're seeing this rally right here and right now. So very exciting. I'm also a big shareholder of Square, SoFi, and PayPal accordingly. So that's all you guys need to know. Hit the like button for me, subscribe to the channel, comment down below what do you guys think about this whole geopolitical tensions. Do you think this is World War III? Do you think SoFi is going to rally? Let me know your opinion on this situation. Also, make sure to get yourself some free stock using Moomoo, Webull, and Public. All three of those free to sign up for. No commissions whatsoever. Deposit $100 with Moomoo and Webull. Get up to 5 free stocks. You could sell those stocks and buy yourself some SoFi at the bottom of the barrel. You are almost guaranteed to make free money by doing that and buying SoFi at these levels. Not financial advice. Anything could happen, but from the data that we know, it looks to be damn near free money. Thank you guys for watching, and I will see you in the next one.